Joshua Mahony is Chief Market Analyst at Scope Markets. Joshua, welcome back. Help us out here then. US stocks hitting a record high. The US dollar stumbled. What's going on here? What's your reading of the markets?
Well, much of this is a continuation of the trend. I mean, ultimately, the uptrend that has been very pronounced in nature over the long term hasn't necessarily been dominant throughout the entire period that Trump's been in power. But certainly, the US markets have come back into focus once again. In June in particular, of course, we've closed out the first half of the year in style for some, not so much for others. If you look at European markets, largely flat over the course of June, but June was all about US markets, 5% gains pretty much across the board. And the weakness we're seeing in terms of the US dollar really highlights the fact that as we push throughout this week with a big focus on this big, beautiful bill, so to speak, it's potentially positive for US businesses. We're talking about tax cuts and the like, which could help the bottom line. But the underlying theme around the rise in terms of the debt in the US, and of course that's come to a head today with Elon Musk and some of his comments that he's been making, really that's not necessarily a good news story when it comes to the US and the growth and expectation for rate cuts from the Federal Reserve, again, with low inflation. That also piles pressure on the US dollar.
Some investors have been betting on Europe as a cunning plan because of all the market volatility. Is that a good strategy, at least so far?
Well, look, we have been talking about the end of US exceptionalism over the initial period of Donald Trump's second term at the White House. That appears to have faded somewhat. Like I said, we saw circa 5% gains across all of the main three indices in the US, but then also the Russell 2000. So certainly there's been a flooding of capital back into the US. And at the same time, we've seen largely flat and just below 0% returns for the likes of the DAX, the likes of the FTSE 100. So certainly it feels like we've seen a reversal of that trend. We did see big stories around ramping up in terms of infrastructure and defense spending in Germany and in mainland Europe. Now we're seeing a focus towards the US where we see this bill potentially being pushed. And ultimately, when you're looking for the growth stocks that aren't necessarily just reliant on one new policy measure from a government, all of those big tech names really do come into focus for the investors. And that's why we've seen that tech really leading the way over the course of June.
Central bankers, of course, concerned about inflation. What do you think the second half of 2025 is going to look like?
I think it's going to be fascinating because we're likely to see the sort of changing of the guard in terms of who's doing the easing, right? We've been seeing the likes of the SMB, we've been seeing the RBNZ, we've been seeing the ECB, all sort of going ahead and driving down interest rates. The second half of the year is likely to be very different. Many of those that have already been cutting are likely to be talking about where that terminal rate is, that they end their easing process. And at the same time, hopefully we get greater clarity and stability, notably for the Federal Reserve, but also for the Bank of England, where they haven't necessarily done much, but they're likely to start ramping up that easing. And we're already starting to see it with the likes of the euro strengthening against the pound. I think you see that sort of changing of the guard also influencing the FX markets heavily.
Joshua, good to see you. Thanks so much for coming back on the programme. Joshua Mahony, Chief Market Analyst at Scope Markets.